there's a difference between depreciation and a reduction, right? When I think about reductions in this time in our business, I think about people trying to catch the market, which is what you just said, right? Our home is worth this, but we're seeing stuff sell, so let's price it up here. Okay, we're a little bit out of balance. We're gonna have to make a reduction here, and I think we'll see that.
Oh, all right. Well, hey, everybody. Johnny Moe here with my buddy David Childers from Keep
Johnny, it's good to be back again on a Friday.
Rainy Friday up here, man.
Yeah.
But we're going to get through this because this is of all the podcasts that we do, this is like my favorite one. I say it every time because it brings information and data to make you look like a professional. And I think we need that data. And you know what? Through this data, gives you a whole bunch of reasons to write blogs, make videos, and everything else like that and stand out. And what do we talk about? We talk about the state of the economy, the state of the markets. What do these people that make big money, what do they see? What are they talking about? What are they doing? Right? Yeah. These people are in the thick of it. And David and his team researches that at Keeping Current Matters and what's going on. And they're able to make reports and write awesome blogs. And I can't wait to get rolling. David, what's happening?
You know, Johnny, it's exciting time to be here. You know, we're kind of winding up the middle of the year, which is hard to believe. You know, today, Friday, November 12th, I believe, if I'm right, almost the middle of November, a month and a half left in this year. Mm-hmm. So things winding up. Here's where I would kind of maybe position some of our comments today. You know, like always, we always talk about a lot of different things on these calls. Johnny, you bring a unique perspective on, what you're talking to people about, great opportunities to record videos, all the things that we end up talking about. But, you know, I would say, like we always do, if you're watching today, you have a question or something you want to see us talk about, put that in the chat. Johnny and I will take a look at that and watch that. But let's talk about where we're at and kind of what's on my mind, Johnny, relative to we're coming up on a season in this country of holidays. You know, 2 weeks from yesterday will be Thanksgiving, and then we just go into, December, the end of the year. We're going to be around a lot of people, maybe that we weren't around last year, maybe because of COVID, gatherings, things like that. And people that were around know that we're in real estate. Okay, so they're going to have questions. And I think, we did a webinar a couple of weeks ago or a week and a half ago at Keeping Current Matters. And I'll tell you, there was one predominant question I think that's out there, and we've covered it a lot. I'm not going to cover it extensively today, but I am going to give you some visuals and some facts to be able to answer the question. It's kind of like, when will this market crash? What's going to happen? I feel uneasy about what I see happening. What's going to happen? Will it continue? And Johnny, I think that's what's going to be on the minds of people as we go through, now and the end of the year. So today I want to talk about prices. I think a lot of people are looking at prices in our business going, gosh, I'm concerned about that. I'm going to talk about a forecast, what we have right now for next year.
Sure.
And then I'm going to kind of end it today and talk about something that I think we're going to need to talk more and more about going into next year. And that's the non-financial benefits of homeownership, and just remind you of those. But that's where my head's at. Tell me what's on your mind, or if there are things that you're hearing people say that we want to talk about as well.
I just hear, some people are talking about that there's still lack of inventory out there, but they feel like it's slowing down a little bit. And, there might not be 32 offers on a property. It might only be 8, right? So if there's anything to back up about that, interest rates are interest rates. I haven't heard any news heavily one way that concerns me, but I know we touch on some of this stuff, and you're right. It's the holiday season. And boy, I can't wait to get talking into, I hope we can align on, you bring up 1 or 2 points that I have in my mind about having a home, some of the benefits of owning real property. Right. So I think that's going to be something that we're going to need to talk more and more about going into next year. And there's going to be a specific reason for that. Prices are going to continue to go up. Interest rates are forecasted to go up. You asked about that. The average 30-year fixed recorded each week just dropped again below 3%. I think it's 2.98% as recorded by Freddie Mac. So we're seeing kind of that hovering there, but the outlook is that rates are going to
to continue to rise as we go into next year. Now, we'll watch what happens there, but it's certainly what's being forecasted. But let's talk about prices, because I think there are a lot of questions about prices right now, and I want to give you the perspective on it. There was even a graphic floating around, I think, in Labcoat this week, talking about price acceleration. If you saw that, may have peaked. I'm gonna talk over that graphic because I think there is some potential confusion on that I want to clarify. But let me share the slides like I do, Johnny, and we'll kind of start this conversation. I always like this graphic. This is the most up-to-date August year-over-year house price appreciation. FHFA 18.5%, CoreLogic 18.1, Case-Shiller 19.7. Always a little bit of variance between what each one of these organizations is reporting, but a lot of appreciation in residential real estate across the country, like we've said this entire year. And again, I want to go back to what you said, maybe not as many offers. We do not have a buyer problem in real estate right now. We have a supply inventory problem in real estate. There's not a market in this country that I think anybody would say, well, I just don't have enough buyers right now. There are plenty of buyers out there. We just don't have the inventory for them. And that lack of inventory has kept this upward pressure on prices throughout the year. There's an interesting graphic from CoreLogic here. Price appreciation has accelerated every month this year, meaning not only are prices going up, the rate at which they're going up has gotten faster and faster. Okay. So I think we know that in our business, but this graphic just brings kind of a reality to it. You can know something, Johnny, but when you see it, there in a graphic, you go, that makes a lot of sense.
So it does, and that is what's happening.
Yeah. So I want to give you another graphic here that I think will be telling that we need to be educated on, because this is the one that's been passed around a little bit, Instagram and even in Labcoat, is that price appreciation acceleration appears to have peaked. So the reason I said I want to bring this up and I want to talk about this are a couple of reasons. One, maybe some misunderstanding, and also explain this. So this is a look at price appreciation acceleration by month going throughout the year, starting all the way back in January. And just like the graphic I used before, the rate at which homes have appreciated has gotten faster each month. FHA, CoreLogic, Case-Shiller right here, every month, a little bit more. Now, what we're looking at here is kind of a peak in that acceleration. What this doesn't mean is that homes are going to depreciate. Always remember, appreciation compounds, right? If homes appreciate 10% this year and 5% next year, the rate of appreciation has gone down, but the actual value of the home has gone up, right? Appreciation is cumulative. So when we were together a couple of weeks ago, Johnny, I talked about deceleration and appreciation. So expect to see, news reports and things like that say, you know what, homes aren't going up as fast as they were. The rate at which homes appreciating is falling. And that's kind of where we sit with prices across the country as we look at that in kind of a macro view of U.S. real estate. So something interesting to watch there. And maybe in your area, if you're seeing the same thing, that prices, not going up as quickly. And I think there are a lot of reasons for that. I think there are a lot of contributing factors here. But I do want to bring one other quote in before I pull the slides down. We can talk about this, Johnny. Bill McBride says this: median prices can be distorted by the mix and repeat sales indexes like Case-Shiller and FHA, and are more accurate measures of house prices. Case-Shiller and FHA repeat sales indexes will probably show a deceleration in house price growth in the coming months. So again, that deceleration word showing up again. But Johnny, what they're saying there is the median price appreciation in this country can be misleading based on where we're seeing homes sold, more homes on the lower end or more homes on the upper end. What we've known over the last year is we've seen more homes on the upper end sold across the country, pushing on that median price acceleration across the country. So I think it's going to come up when we're with people, and I'm not suggesting that we're going to try to turn a holiday dinner into a listing appointment by any means, but I think people will have questions that we can say, hey, let's sit down next week and let's talk about what's happening in real estate, because I'll give you the answers.
Yeah, for sure. And, that aligns with something that I've been seeing more and more of in different areas and in different conversations. And that's the price reduction, right? We haven't seen price reductions or needed to see price reductions for quite some time. And now all of a sudden we see stuff going from whatever it is, dropping 50,000 or something else like that because they were pushing the envelope. So what's happening is they're on the tail end or the declining end or the plateau, if you would, of that acceleration and appreciation. So
Yeah, I think there's two things I would draw out about that. There's a difference between depreciation and a reduction, right? When I think about reductions in this time in our business, I think about people trying to catch the market, which is what you just said, right? Our home is worth this, but we're seeing stuff sell, so let's price it up here. Okay, we're a little bit out of balance. We're gonna have to make a reduction here, and I think we'll see that.
Yeah, me too. What's going on with the economy? There's just been some news out that the economy. Do you have anything that you guys have been working on about that? We're at 6.2%
inflation. Yeah. Our team's working on that right now. So every week we have a research meeting where we're updated by an economist that we have on staff at KCM that kind of looks at appreciation. And I'll tell you, there's some concerns right now. The good news as we sit right now is housing has been relatively immune from issues in the economy. So immune to issues with unemployment, immune to some of the COVID issues. And now that was the big concern last year is how we're going to make it through COVID. Well, we made it through that in real estate. And I think forward looking, I think most people, the consensus that I see is people saying inflation is going to be an issue. The question is, how is that going to affect housing? I will tell you, our team is working on that right now to go back and look at prior inflationary markets, the impact on housing. Again, I always say, the best hedge against inflation is a fixed housing cost. We know rents are going to continue to go up, but I think it's something as a country we're going to have to keep our eye on, in the coming months and years.
I gotcha.
I'll tell you this. I'll make a commitment to you. Next time we're together, I'll bring you some information on that.
Good. I'm looking forward to that. And what does that mean? I mean, if the housing prices is staying where they are and the interest rates are staying good, that part of your life doesn't see that inflation. It's with the ancillary goods and the cost of everything else like that. And I'll tell you what, it's a perfect opportunity. Are you guys listening to me? It's a perfect opportunity to start hosting some in-home parties and having a great person come to them. You might not do the cook. You might hire a person to come in and do the cooking and things like that. But it's a great opportunity to, instead of going out and spending $200 or $300 or $400, you can actually cook in with a couple of close people and get out of it for $100, including the 3 bottles of wine, if you know how to do it right.
Yeah, I think there's a couple of things, Johnny, with that, and let's kind of keep on that narrative of people are going to be around, people are going to ask, well, that's definitely going to be a question. How's that going to affect? I read a quote this past week. 2 things that are true right now, by and large, and I'm not saying there aren't people that are challenged in finding a job and people that are hurting today. There are, no doubt. But overall, economically speaking, most people are in a better situation today than they were 5 or 10 years ago, just in the growth of the economy. The other truth is when you look at consumer sentiment in the economy, people don't feel that way. So that's very interesting. They're better off, but they don't feel that way. And that's certainly not maybe you go, well, that's not how I feel, but I think it resonates with a lot of people. And one thing that I think we can do as real estate professionals is help educate people. And is now a good time to buy? Because I told you, a lot of people saying, hey, is this market going to crash? Are we in a bubble? What's going to happen here? I see inflation. I see all of this noise around me. What should I do with real estate? One of the quick ways to be able to answer that question is to say, what are experts saying about the real estate market going into 2022? I think we need to be educated on that, because if somebody says, you know what, I don't know what's going to happen in 2022, or you don't feel like you have that, that is a perspective or a relevant market opinion based on facts, then I don't know how you answer that question. But let me talk just a minute about what experts are saying going into next year, because I think there will be some chance to have conversations about this, over the next few weeks.
Next year is only about what, 48, 60
That's
days.
the crazy thing is it's right around the corner. But it'll be here before we know it. But we've looked at this price forecast before, Johnny. 2022 home price forecast. We update it every week if there are changes from different reporting agencies. 5.1% is the average price appreciation forecasted next year. So the answer to that question is somebody, ask you, hey, is this thing going to blow up next year? Is, our home's going to lose value next year? Not what experts are thinking. You have the 6 here from NAR all the way to Fannie saying anywhere from 3% to 7.5% price appreciation. Now, there are a couple of reasons for that. Not as much appreciation going into next year as we saw this year. There's a reason for that. That is because experts are forecasting we'll see more inventory come into the market. And reasons for that, whether they be new builds, they may be folks that didn't put their home on the market. They're expecting to see that. And you can definitely read that into this forecast. Doug Duncan from Fannie Mae says right now we forecast mortgage rates to average 3.3% in 2022, which is slightly higher than 2020 and 2021, and by historical standards is extremely low in support of a mortgage demand and affordability. Well, even at 3.3% is the average. We're below that now. We'll probably be a little bit above that by the end of next year. Still a very, very good rate for a mortgage. That's certainly not going to squelch the demand that's out there for folks that want to buy a home. If you look at this graphically, and mortgage rates here, where we've been, it's very, very telling. This goes all the way back to January 2018, and just this drop that we saw in rates during the pandemic. And this is kind of the forecast here from Freddie Mac on what they're saying is coming around the corner relative to mortgage rates. So again, if somebody's asking, should we do something now? What's your take on the market? Well, certainly prices going up, interest rates going up, or what experts are forecasting going into next year. And again, to answer that question, is the market going to crash? I used this graphic last time we were together a couple of weeks ago. Home sales are forecasted to increase this year, 2021, and again in 2022. So a very, very good market forecasted for the real estate business all across the country. I always want to bring the perspective in that in 2020, we sold 6.5 million homes in this country. We're forecasted to sell more than that this year and more than that next year. So 2 very, very good years in real estate, Johnny, this year and looking forward to next, that I think will help us answer some of those questions our clients may have, as we see them over the next few weeks.
What was interesting was the first slide that you shared that showed the appreciation or the estimated appreciation. And listen, it might sound like, oh my goodness, right? We've hit the ceiling or we've hit the plateau. But here's the thing: 3% appreciation is normal. That's a normal rise.
3.8. Yep.
Right. The 18 that you showed, that's unprecedented, right?
Yeah.
Maybe that becomes the new norm. Who knows? But throughout the history of history, that wasn't the norm. Yeah. Right? 3 to 5% is healthy.
Totally. And remember that what consumers will feel is, last year we had 18% appreciation. Let's say we go down to 10% appreciation. People are going to think, oh my gosh, homes aren't appreciating to 18% anymore. Right. What's going to happen here? And we're heading definitely, hopefully, into a more normalized market. And maybe even normalized is not the right word for that. Even where we go next year will be above normal. But we have to communicate that message to the folks that we're doing business with.
Yeah. So now we get to talk about some cool stuff. We're going to talk. What are we talking about next? What was that thing that you got me all excited about? You tempted me with some ideas and coming into next year, or the conversations about this year and ideas and such like that.
Yeah. I think as prices rise, interest rates rise, it's going to cost more. We've talked a lot about in the last year of why it makes so much financial sense to own a home. And I think that's going to be true going into next year. But I think we're going to have to talk more and more about the non-financial benefits of home ownership and why it's so important, why we believe in home ownership is people in our business. Unison came out with a report that our team did a lot of work around. And there's some very interesting things happening in real estate right now. And I'll kind of bring these up and show them to you again. If you want to use these slides, you could email me. I can put them, Johnny, I can send them over to you, whatever the case is. But I want to show you this report because I think it's very interesting. It's 2021 State of the American Homeowner report, and really speaks to the non-financial benefits of home. 64% said living through a pandemic has made their home more important to them than ever.
Yeah.
83% said home has kept them safe over the last year. 91% say they feel secure, stable, or successful owning a home. Were you going to say something?
The one I was hoping you said, security.
Yeah.
That one is powerful. 91%.
Yeah.
Homeowners say they feel secure, security, right? Stable or successful owning a home. That is awesome.
Yeah. It's really, really neat to see. You know, there was a quote in this report said last year, staying home became a necessity that caused many homeowners to have renewed gratitude for the roof over their head. And no doubt all of us on this call, you and I, Johnny, everybody listening, could say that's been something different to us in the past year. We didn't, anticipate the pandemic, arriving and causing what it caused, the disruption in our lives. But no doubt home's taking on a new meaning. Now, there's something very interesting in this. If you go back and you look at prior surveys, homeowners that felt attached to their home, emotionally attached, prior to the pandemic, 58%, now 70%. This is really interesting and important, Johnny, because if you remember back in 2010, there's sort of this idea where, a lot of folks felt like maybe buying a home is not the American dream anymore. Maybe I'd be better off renting coming out of the housing crisis. And while a very, very different crisis back then, we're seeing almost an exact opposite feeling coming out of this crisis, where people are saying, no, home ownership has meant the world to me through this pandemic. Home ownership has made the difference in my safety and security. Home ownership has not only been a smart financial decision, but it's been a wise lifestyle decision that is very, very different than what we saw 10 years ago in the way consumers have responded. And we've seen that in our business. We just talked about price appreciation. The reason prices have risen so quickly is everybody's tried to buy a home. Now, there are low interest rate reasons for that. There are needs changing reasons for it. We go down the list of all the things that we know. But no doubt we're seeing a very, very different response than what we saw 10 years ago coming out of, a different crisis. But I'll kind of sum it up with this. Buying a home is not just a financial decision. It's also a lifestyle decision that we need to remind people of as we go into the new year.
It is a lifestyle decision. And like I said a minute ago, you can host parties, you can host barbecues, turn your home into that place instead of going. I mean, trust me, I love you going out to the restaurants and everything else like that. But if people are, you got your home, turn it into a centerpiece, turn it into that entertainment area, right? And not only, I'm not saying for everybody else, I'm even saying for you, make that cool back patio, get that cool, expensive outdoor furniture, right? Make it comfortable for yourself. But you can start to entertain more at your house. You don't think I think there's two things going on. We don't have to go out as much because we're realizing that we can stay home in our cool environment. But people are also thriving to go out again. And that's why you're seeing a bunch of, these events filling up and everything else like that. But still, there's a lot of insecurity, I think, around big public events and everything like that.
Yeah, no doubt. But
turn your home into that secure, fun environment, grow a garden, grow some vegetables, and have fun.
Yeah. And it's, for those of us that, the last year can say, my home's taken on a different meaning for a number of different reasons. I think that makes sense. And I think as we talk about that with more and more people, that will make sense with them. And I think, again, the question as we go into the new year is talking with people. Are they thinking about listing their home? Are there investors that are thinking about, I'm going to take some money off the table right now? Are there folks saying, the needs that we have, while we are more connected to our home, our needs have changed, whether that's to downsize, to move up. And that's exactly where we're at the end of the year. And I think that report there, Johnny, you're always so good with, the video you can make or use that as a backdrop. That's what I'd be doing right now.
Right here. You can take this, you can use the green screen option inside of TikTok. I don't know if Instagram Reels has one, but I know TikTok does. And you can talk about this right here. I know you've all seen the types of videos. Have home prices peaked? Listen, I'm going to share a couple of pieces of information with you that show that home prices may have peaked, but there's still some appreciation that's going to be going. According to Keeping Current Matters, who researches this, and with Fannie Mae and FHA, CoreLogic, and S&P Case-Shiller, it looks like the prices have leveled out after an amazing run. Y'all can do this. It's free. Well, it's not free. It's free for 14 days. And then it's a price of you can't even buy anything anymore for $1. You go to the dollar store, it's $1.25. Sure, but it's about $1 a day to join Keeping Current Matters, but you get it free for 14 days.
Yeah. It's $29 a month. After that, so, yeah.
Right. But think about it. You guys, every agent out there needs to be doing video. Every agent out there needs to look professional. Kind of like the peanut butter and the chocolate hitting, right? Making the Reese's peanut butter cup. That's the same thing. You're getting content delivered to your inbox every day. You can then take that content and explain it on your video and put that out on TikTok, put it out on Reels, put it out on Facebook. And you're doing what you got to do anyways to stand out with the video. And B, you're going to look like the most educated person in your market because you're sharing awesome data from smart people that did all the work for you.
Yeah, absolutely. You know, the KCM research team that goes and looks at all these reports and creates all these graphics does an amazing job. Listen, if you want that, email me. My email is david@keepingcurrentmatters.com. Email me and I'll send them to you. You can use them for a video. You can do like what Johnny did, take a picture of it, use them there. But more than anything, I'm grateful for all the folks that invest the time and, coming to these, and we want to get those to you so you can use them.
Absolutely. Go to trykcm.com, try it for 14 days, and then it's what, $29 a month?
$29 after that, yep.
And not even $1 a day unless you're in February.
That's right.
Now, everybody, David, thank you. I mean, you always make my head think, and, this is the data that I think elevates us from being a real estate salesperson to being a real estate professional. Being able to go with factual information, being able to explain that information, and being able to understand yourself, the state of the state or the state of the union from our perspective of real estate sales, the economy, mortgage rates, bringing it all together. Because let's face it, there is a lot of confusion in our industry, and the news sources are only out there trying to get you to clickbait. They're clickbait. Yeah. Oh my God, the housing market has crashed. No, it hasn't, right? But when you're able to go out there, kind of like competing, you want to compete against that big Z company with your data and stuff, go out there and combat the wrong information with the right information and position yourself as that community person. You know everything about what's going on and break it down to the layman. Hate to say it, I'm not calling anybody stupid. The average consumer is a layman. They don't understand. Help them understand, because David's going to help you understand. All you have to do is read the blog, say, well, I understand that. I can make a video on that, make a video about it, then put it out.
That's right.
You don't even have to put the video out. You can actually even just share the blog.
That's true. That's good.
Everybody, thanks for being here. Our time is up. We'll see you in 2 weeks. I think we might have, with Thanksgiving coming up, there might be a bump in the schedule, but if there is a bump in the schedule, we'll see you on the next one. David, thank you. Go to trykcm.com. Peace out, everybody.
All right. See ya. Take care.